How do I look? Can you see me?
Yeah, we are good. We are live.
Oh, we are.
Yes, ma'am. We are live.
Okay. Let's
Good
see.
morning, family. This is your boy, Stephen Thomas with Refine Realty. I have one of my favorite people in the world, Miss Rhonda Johnson, the Regional Director for Mortgage Lending at New City Mortgage. Today, we're going to be talking about getting a mortgage and the process of getting everything completed. There's a bunch of stuff out there right now with rates and buy downs and all this sort of stuff. Bank of America is supposed to be giving away all this money, blah, blah, blah. Miss Rhonda, tell me what the real deal is when it comes to getting a mortgage.
Real deal, Chris. Steve. Thank you for having me on your show.
Yes, ma'am.
The real deal that we're going to talk about today, we're going to break down the components of what it really takes to buy a home
Okay.
so that people are not fooled by great marketing tactics to get data, uh, fooled by trying to suck you in, bait and switch type of things. We're going to talk about the real deal. And I like to start with breaking down that loan application.
Okay.
What's the driver when we first look at a deal? When you first look at a deal, credit, I says, open the door. Credit's going to
Right.
tell us what direction we can go into. The lower the credit scores, Steve, the real deal is less option you have. The better your credit score is, the real deal is more options that you have.
Gotcha.
So the real deal is the better your credit is, the more options you have. So that's important that I want people to know. The real deal is the better your credit is, the more options you have.
Okay.
Anything typically over a 640 is going to get you a little bit more options. 640 and below, you have less options, but I want to make the case you still do have options.
Gotcha.
You just have less options.
So what are those at 640? What are those options that open up?
Right. 640 and below, you're going to find yourself in that USDA, rural development, FHA, as well as conventional. Now, the lower the credit score is on conventional, the higher the mortgage insurance is. So there may not be a route you really want to take. So can you go there? Yes. But your mortgage insurance is going to be higher because 640 credit score is considered low for a conventional type of loan.
Gotcha.
So when we talk about real deal, we need to talk about what credit scores affect what loans.
Okay.
Okay. Can you get a five? Can you get a conventional loan with a 580? No, you can't. That's the real deal. Can you get a USDA loan with a 580? No, that's the real deal. Can you get an FHA loan with a 580? Yes, that's the real deal. So it's very important of knowing what options you have with a higher credit score and for a lower credit score.
Okay.
So, and that's important. So once you start getting over that 720, you have all the options on the table. The key is what's going to be best for you in your situation. That's the real deal that you just can't look at a score and determine you automatically going to go conventional. What if your debt to income ratio is high? You may need to go FHA.
Mm-hmm.
I had a guy that had a 740 credit score, but he was maxed on his credit cards. He had student loans, he had car notes. For him to get the loan amount that he wanted, FHA was the best route for him.
Gotcha.
So the real deal, to sum it up when it comes to credit, is that you cannot just put people in a box based on their score. And the better the credit score, the more options you have. That's
Gotcha.
the real deal.
Okay. What else when it comes to the application that's important when you're filling out those applications with a lender?
So when we look at your credit, we also look at your income. The two main components about a loan application is credit and income. The real deal about income is there's all types of income. You have W-2, you have people who have 1099, you have people that are W-2 and they have a side business on the side. The real deal, Steve, is if it's not reported on those tax returns and we need those tax returns, we can't count it. Real deal is the real deal is if it's not documentable, we can't report it. You can't count it. That's the real deal.
Now,
That's the
question,
real deal.
it's interesting you talked about that because I've come up with clients before that have regular jobs but have a side hustle. But when they do their taxes, they're trying to maximize their rebate checks and things of that nature. So you have accountants or some of these
So the real
accounting
deal when it
firms.
comes
Yeah,
to that is if you don't own a home and your tax preparer, your CPA is doing your taxes with the purpose of getting you a refund check, they're not helping you become homeowners. Matter of fact, the loss that you're taking in order to get that refund to avoid paying taxes is that same amount is deducted from the income that you want to use to qualify. So let's say, for instance, you had a small business and you wrote off $30,000, but on your salary job or your W-2 job, you had $70,000. So I need you to now take 70,000 minus 30. Now we're only working with $40,000 for qualifying income. You just took 30 grand off the table from the 70 because we have to subtract it from what you have. So the real deal is you actually set yourself back trying to get a refund that you're going to spend in a few months or less.
gotcha.
You just set
So
yourself back, and you could have changed your zip code with keeping that income on the table and paying taxes. That's the real deal.
yeah, well, we're getting close to tax time in a few months. So, people are going to start doing those things. So if they are serious about getting into home ownership going into 2023, what are some of your suggestions for them?
I think the first thing they should do, they need to call us first before they file their taxes.
Okay.
Let's talk about where you are. And when you going into talking to your CPA, your tax preparer, just being honest about what you made and showing them the benefits of what an approval is going to look like if you don't take losses, what this approval is going to look like if you do take taxes. When people actually see that, they usually do the right thing because buying a home is overrides getting a refund check of $7,000, $8,000, whatever that amount is. It overrides it because buying a home is going to last longer than that refund check. And that's just the real deal, Steve.
Mhm.
That's a reality.
Okay.
So come to us, reach out to your lender, reach out to your realtor to determine what your approval amount will most likely be if you do not take a loss on your taxes. And let me share this with you. If you're taking a loss on your business, and if you're self-employed, you have income that's declining, not going up. That could break your deal. If you're just self-employed and you don't have other income on the table and your income is going down because you're taking more and more losses, you're basically saying you didn't make money.
Mm.
Think about it. You
Yeah,
in 2 years, you really made $150,000, but you wrote off 130.
makes sense.
You basically said you made $20,000. We're not going to lend to you based on $20,000, not for a home.
Gotcha.
Make sense?
Yes, absolutely, absolutely. So we've talked about credit. We've talked about the income. What is another section of the application that's super important?
Another part of the application is being honest about your marital status. If you're single,
Yeah,
you're single.
yeah.
I'm a single woman. I'm not saying I'm not married, right? But if I was married and I was separated, I'm not walking around here saying I'm single. I'm married but separated. There's a box on the application that says separated. Okay. Um, being honest about your true status. That's very, very important because we're going to find out when title pulls their records, they're going to determine and see if you're married or not. So it makes no sense to lie about your marital status. Unfortunately, people do it all the time. If you are married and you're trying to buy a home without your spouse in a community property state, they're gonna find out.
Right. Texas is a community property state. Yeah.
Louisiana as well as many other states. Being honest about your status is critical because we're going to find out. It doesn't make sense to lie about it. Another important thing is how long you've really been on your job. We do what is called a verification of employment. That verification of employment requires that employers tell us when you started and if you're currently working, and most likely will you continue working there. That's critical to your deal. If, and I tell people, listen, be in good standing with your job when you go to apply for a mortgage. You
Yeah.
know, be nice to that supervisor. You know, you you need them. You need them.
Yeah. Yeah.
You don't need to. We don't need to set up verification of employment. They say, oh, yeah, they work here now, but they most likely won't be working here. That will
Gotcha.
kill your deal. So, being in good standing with your job. Another critical thing that a lot of times people don't like to talk about, Steve, you need to have your money saved.
Yeah.
You need to have money saved. When they come to you or come to us, you know, we're going to educate them. But when you pull the trigger, you need to have money in the bank.
Yes.
You
In
need to
the
have someone in the bank, not under the mattress, you know, not at, you know, cousin, you know, such and such house. You need to have some money saved. The real deal is do not come to the table with a free mindset that I can buy a home with no money. That is not true. That is not the real deal at all. At all.
yes.
So that's the real deal. Save your money, protect your credit, and also your debt to income ratio. I need to talk a little bit more about that because people, Steve, oftentimes think that, oh, I got a 660 credit score. I'm good. It's not just the credit that matters. If you have six figures in student loan debt, you have car note, you have obviously your rent, you have credit cards, you have other little loans you have debt out there. And the real deal is if you're making $30,000 and you have probably over 100,000 plus in debt before you bought a home, you probably gonna have high debt to income ratio.
Yeah. Yeah.
So the to break it down very simple for the audience that's listening, do your best to make sure you're living below your income. So if you're making $50,000 a year, don't be maxed at it spending $50,000 every year. Or I would say your monthly breakdown income, 50% of that doesn't need to be going to just your bills.
Right. Right.
So your debt to income ratio matters. I've had many people where they were maxed out on their debt, but they had little income. So that's important. If you're gonna have a lot of debt out there, you need to be making sure you're making good money
Right.
as you're taking on that debt. That's the
Yeah.
real deal, so that you can give yourself a chance of buying a home, a real
Yeah.
chance of buying a nice home, and that's the real deal.
Yeah. Man. Hey, it has been amazing talking to you, breaking down some of the important things that lenders look at when we're looking at getting you into a mortgage. Real quick, because we're running out of time. How do everybody get in contact with you?
Call me, Miss Rhonda Johnson, aka Miss Fire, my landlord. I really want to fire your landlord. My direct number, like you get me, at 225 588-8111. Or if you see my email address, it's Rhonda.Johnson at New City Mortgage. And we would love to give you all the real deal. Steve and I work together as a team. And more importantly, we're going to shoot you straight. Steve like to use those words. I like to shoot you straight.
Yeah.
But you appreciate being given the honest information and the real deal on the front end. That is truly the best way to do this because you're not wasting time and you know what you got to do.
Beautiful, beautiful. But I know we're wrapping up on time. There is a great community that Miss Rhonda has started, which is called Fire My Landlord. It's a
Yeah,
Facebook group. Go ahead and search it. Apply in there. She drops gems every day on tips and things that you can do to get yourself ready to fire your landlord. But as always, it is your boy. Thank you, Miss Rhonda, for being with us today. We're going
absolutely.
to be back again next week at the same time, giving you guys more information about how to build wealth through real estate. Again, it is your boy, Stephen Thomas, for Refine Realty, where the advice is free, but the knowledge is priceless. I'll see y'all next week. Peace.
Thank you. Peace.